Let's talk about specialty chemicals then, and let's try to find out what the outlook is, what the impact of the China plus one is, and also what the demand trends are in the space. We're joined now by the management of Balaji Amines, by in fact the managing director, D. Ram Reddy. Thank you so much, Mr. Reddy, for joining us. Could you talk to us about the continued demand from pharma and the agrochem industry, as it comprises about 77% of your revenue mix as we understand it? How are the trends panning out there, and what would you say is the impact of the China plus one effect?
There's a good growth coming in various sectors, but only problem currently we are facing is one is the logistics internationally, because of the shipping lines and availability of the containers is a big issue for the entire industry. Including us, we are facing this problem. Even for the exports as well as for the import cargoes also, we are facing the problems. If that is solved, so there's a really tremendous growth coming in for specifically for the AP and pharma industry, and even agrochemical also is coming very good demand.
Mr. Reddy, I just want to follow up on that. So you mentioned that container prices are a huge drag for you, and I would assume that they are denting your margins to a certain extent. What kind of impact, can you quantify it for us? And one would assume that once that issue gets sorted, and assuming that it gets done perhaps by next year, we could see a substantial increase in the spreads for you, right?
There will be 10 to 15% growth is seen in all the sectors. But only these containers, see, I will tell you, for example, we used to send some of the containers to the export market. Like suppose there's a $3,000 to $4,000 per container. Today we are paying more than $10,000, almost 3 times to the normal price we are forced to pay. We are, of course, we are in a position to pass on, but not to that extent. The user industry is not in a position to absorb this cost. So that is impacting on the total sales.
Okay, just in continuation with that, Mr. Reddy, how is it that you pass on the inflation in raw material prices to the end customers, and how do customers typically react to these price hikes? And what I'm trying to gauge is how much pricing power do you actually have on a typical basis in times like these when there is clearly that added raw material cost pressure?
See, normally this happens if it is happening all over world. So then it is easy to pass on. It is happening only for us. It is happening only for one country. Then it is difficult. See, it is happening all over world. The price is going up. So it's only a matter of time. The transition time will take 2 to 3 weeks. Suppose there is an increase today. For us to pass on this, it will take 2 3 weeks to percolate the increase to the user level.
Sure. What is the guidance then that you can give us in terms of the volumes that you're likely to clock? Tell us about the revenues, the margins, profitability that you see for the fiscal year end.
See, presently, as we said earlier, recently we have commissioned one plant, that is triethylamine, which is about 50 tons per day capacity. That is started and doing well. And we are expecting one more plant, that is the dimethyl carbonate, with the 10 to 15,000 tons capacity, which will be commissioned by the end of this financial year. Once these two comes in stream, we expect the current financial year around 1,800 crores on consolidated basis, along with our subsidiary. Altogether, it goes to 17 to 1,800 crores. And we should be in a position to, with the current situation, we should be in a position to maintain the EBITDAs around 25 to 26%.
I just wanted to know what's your revenue mix like right now? I understand that a big chunk comes from pharma, I think agrochemical as well. So if you could just give us a bit of insight into the revenue mix.
See, our total basket, about 60% goes for the API and pharma industry, around 25 to 28% going for the agrochemical industry, and balance 2 to 3% in each, like colors and animal feed, refinery, dyes, water treatment chemical. These are the other sectors, paints, these are other sectors where it goes to 2 to 3%. But major 65% goes for the palm and API, and around 25 to 30% is going into the agrochemical industry.
Understood. Now, what sort of disruption are you seeing on the in your supply chain? Because whoever we speak with has been talking about shortage of containers, about surge in freight costs. In fact, transportation costs have increased significantly. Are you seeing that sort of increase in costs overall for you? How much has it been in the last 1 year? And are you facing supply chain disruption?
Yes, we are facing. Definitely, it is, as I said just now, it is almost threefold increase we have seen in the freight, outward freight, even incoming freight also. Luckily, because it is happening entire world, we are in a position to pass on slowly. As I said, it will take only 2 to 3 weeks time to pass on this total increase. We do not know how long this will go. Until otherwise it stabilizes to the normal level. It is very difficult for the entire industry. In the logistics, it will impact on the total exports, and it will impact on the cost of the end products for the medicines, and all the things will impact definitely.
Okay, Mr. Reddy, we leave it at that. Appreciate you giving us time today and speaking with us on ET Now. Thanks so much.
Thank you very much.